July was either your worst month ever or your best month ever. And the distinguishing difference came from one thing: you understanding macroeconomic trends and how to play downside movement in the markets. Let's go ahead and dive into July, because this is not a video of me bragging about how I did tell everyone at the very beginning of June that SpaceX was going to mark the top of the market. This is also not me bragging about how SpaceX was an incredible trade for hundreds and hundreds of people, investors, funds, and money managers, because my thesis, it played out perfectly, and it's going to continue to do so. Let's dive in and check out the markets. We're going to pull up the broader market, SPY. SPY is the S&P 500, and this has been so far still kind of rock solid. Again, if you got absolutely murdered, it's because you're playing some high beta names. High beta names mean that you are buying very, very volatile stocks that probably are not a part of the S&P 500, maybe, or they just move extraordinarily quickly because their market cap is less than 10 billion. If you are playing the SPY, however, right, owning shares, playing options around the SPX or the S&P 500, or you're an investor in the S&P 500 and you're just buying on down days, you did just fine. So it really does depend on how and what you're playing, because the SPY, granted, from June 2nd until, well, I guess the end of July, was down 1.5%. So really nothing. But overall, sure, it had a 4.5%, 5% move. What's happening right now is you're correcting what's called time and not price. Movements like this allow moving averages to catch up. It allows traders and investors to kind of rest and pause after an extremely strong, very, very powerful April and May. And it just allows what's called a distribution to take place. Overall, to me, it seems like we will slowly kind of continue higher, especially as the 200 and the 100 slowly start to gain momentum and generally overall press the stock higher. Now, the QQQ, which is the NASDAQ ETF, did have a larger pullback because tech had a larger pullback in July, mostly because they were too hot. They were way too extended. People were way too profitable on them. It was way too easy, and everything just kind of went up. If we zoom back again to June the 3rd, when I was like, hey, SpaceX is going to mark the top of this market. Just look at this move. This move is so unbelievably rare for something like this to happen, this size of move in the markets, right? From March to June, the broader market QQQ, right, which is the NASDAQ ETF, went up 33%. Now, granted, you didn't have to catch all of that in your retirement account or your investing account or even your stock trading account. If you catch just a portion of that, you're doing extremely, extremely well. But what you need to do in the markets is go back in time and truly practice what starts to make the shift. And I'll give you two quick examples. Number one, this move right here. This is a bear gap and go, which is a bull candle gapping down, specifically opening below the low of the prior candle. That candle had an immense amount of volume. There was a lot of fear that came into the market over these 3 or 4 days. And that was a warning signal for sure that we're going to have some future selling, because gaps like that are very strong, especially when they occur at the top of a market. Secondly, this gap right here. This is a very, very big one. Very huge, very massive. And this is called a bull retest gap. What it means is simply that you have a bull candle, a buying candle, gapping up. And since the gap was so big and it was occurring at the previous all-time high, you knew that buyers were going to have to take profits, simply meaning that this gap was going to fill. This was a day that, yes, I was able to catch some downward movement on this move, which means I bought some stocks. I got into some high beta names. I sold some puts. I picked up some shares, so on and so forth. And when I got this crazy, insane, like, what the heck? The stock is gapping up this big. That's nutty. And I know this retest gap is going to fill, and I know it's occurring on a Monday. That also means that you have a gap on a weekly chart. Gaps on weekly charts, especially bull retest gaps, especially at prior all-time highs, are extremely likely to fill. That piece of knowledge right there can save you all kinds of time, heartache, and anguish. Because if you know how to trade options or if you know how to trade inverse ETFs, this is a spot where you can start actually picking up some protection. And then, of course, you'll notice how far we are away from these long-term averages. The reason that your boy has been using these long-term averages for a little bit north of 15 years is because they work. Do other moving averages work? Absolutely. Everything works in trading. All indicators, all averages, they all work at some point. They just don't work all the time. And what not working all the time means is stock can trade down into them and not respect them and just go right through them. But for a period of time, depending on what average you're using, they will act as support and resistances. And what you'll notice is the QQQ did actually pull all the way back to the 100 simple moving average. From June into July, we had a 10% pullback on the Qs, which is very healthy, very normal, very respectable. And now, ladies and gentlemen, going forward, we have a remarkable candle that's giving us beautiful insight. And I do think personally that we will have a pretty decent month. But today's candle, the one that we're just now looking at, is going to be the actual indicator of that. Because if we break higher than Friday's candle, this is a high wave bear candle, which means tons of indecision. It's occurring after a 10% pullback, and it's happening right here at the long-term averages. For me personally, I'm back to being relatively bullish on some things. There is some great opportunity out there, and you had some really good volume come in at the 100. You did have a bull gap and go down here off of the 100 simple moving average. Big bull volume came in, and now you have a bear indecision candle that says, hey, I'm not really entirely sure what we're going to do. Are we going to do one of these, or are we going to do one of these? A close above the high of today's candle. So today, on Monday, which is August the 3rd, a close above today's candle, I'm going to be pretty bullish for the next couple of weeks and months, most likely expecting us to kind of grind higher. And I'll be a little bit more patient on some bull trades that I purchased and just letting them kind of cook and marinate and do their thing. If we close below this candle and we get back below the 100, I do believe that we're going to start chopping around for a little bit. And then I don't know. Obviously, no one knows anything for sure, but I can tell you we're either going to have an absolutely ripping September, October, or if the predominant general trend of September and October hold forward, then we can start breaking down and we'll actually have more lows and the broader markets will fill this gap down here. Now, take a screenshot of this because this is how I plan. I will make this video and I'm going to come back to it and watch it myself, not from a place of arrogance, from a place of this is how I plan. I say, this is what I think is going to happen. I kind of come up with some theses based on, yes, experience, of course, but based on candles, percentages, moving averages, all the things. And then based on that plan, I know how to hedge or properly position myself. Really quickly, here's an inverse ETF. An inverse ETF is a stock that will go up only if the markets go down. This is the ProShares Ultra Short S&P 500. So if there's short periods of time where you're like, man, I really think the Qs are going to go down, this will actually go up. This is something you can buy in an IRA or any other account. My biggest suggestion on this is do not hold this long term. You will get absolutely murdered. However, if you can trade it for a couple of days or a couple of weeks or even a day trade, there are opportunities to make money on this. If you buy it, if Qs go down, this increases in value. That's what inverse ETFs do. All you literally have to do is Google inverse ETFs. You'll come up with a list of tons and tons of them. All right. Since we're here, let's go look at SpaceX and Tesla. I am still in over 300 contracts of SpaceX Exploration Technologies Corporation bearish. The 150 August puts that I purchased over here for approximately $17, they're now worth almost $50. And the reason is because broader macroeconomic trends, right? This is what IPOs do, especially when they're overhyped. And I'm sorry if you bought anywhere in here and didn't sell. Earnings is coming up, and I don't expect them to be great, number one. Number two, we're gapping down pre-market right now. It's going to be 3 bear candles in a row gapping down, so we probably will retest a little bit up into this price and then probably roll back over. But the big thing that is coming up is lockup. Lockup expires, I believe, the first or second week of August, which means that over 20% of the available shares to own on SpaceX for the general public and or people who bought in before the IPO and or people who own the company, own shares before the company went public. Employees, they will have the ability, some of them, to sell their shares in August. So my expectation is SpaceX will go lower. There's tons of people that do expect SpaceX to start bottoming around 90 and 80. I'm one of them. And all I can tell you is that I do think SpaceX will have long-term value and that it can go higher. I think the fair market value probably is 80, 90, 70. So if you're going to start buying it, my personal opinion, of course, but it's a professional opinion, buy 5 or 10 shares every down day because you're not going to be able to call the bottom. I'm not going to be able to call the bottom. I'm sure that there will be a bottom eventually, and the bottom will create a decent little opportunity to create some cash flow, especially if we get down to 90 or 80, and then we trade up to 120 or 130 over the course of, a few months, and then we rotate back down, and then we move higher again. There will be some really good trading opportunities for you. So just keep in mind, that's my general thesis and thoughts on SpaceX. I am holding my puts over earnings because at this point they're free. I've already paid for all of them, and now I just get to see what happens. And they are so far in the money that I don't really believe that there's anything negative that can happen ultimately, other than just losing some potential profit, which is perfectly fine. Tesla. These are just my thoughts on Tesla, of course, but I do trade Tesla more than you do anything else. And Tesla had an amazing gap down on earnings. You had 2 inside candles here creating massive, massive compression and indecision. You were, in fact, below the 100 and the 200 simple moving averages on the daily chart. And we did open and absolutely scorch below the 100 simple on the weekly chart on earnings, which I said, if that happens, we are going to get a massive sell-off. And we did. We also bottomed at a very, very strong grandma number of $300. So is this going to be the absolute bottom for Tesla? There is a very good chance. 50-50. So it's a coin flip if Tesla's going to bottom. There's nothing really, really down here other than the $300 price point for it to actually bounce off of based on what I use. But what I can tell you is I do expect and plan to sell some covered calls and get into a collar again on Tesla around 340. If we consolidate here and we kind of hang out, we end up breaking the support. I have no evidence why we can't get to 283. But ultimately, this is kind of the pattern that I'm watching for Tesla to kind of play out. This is a very, 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 very strong gap that eventually will fill, in my opinion. But I think it's going to be a little bit tied to SpaceX, right? Tesla and SpaceX are they're going to trade hand in hand a little bit for a period of time because the whole Elon Musk thing. And, we'll see. So as we get closer into 320, 330, 340, we'll have to sell some calls on Tesla. Those calls will have to be sold around 380 or 400 or 405. There will not be tons and tons of premium for them. Probably we'll sell them for September. If you sell anything for October, you could sell like the 420s or the 430s and bag hold for a little bit longer and see if it can go up. And while it's down, pick up a share or two every other week using income from your life, using option cash flow that you're creating from selling puts or from selling calls or from day trading calls or options, call options or put options, if you know how to. Here's the weekly chart on Tesla. And so again, we have a very, very gnarly breakdown, but we do have 3 bear weeks in a row with a cute little hammer down here. The 200 simple is at 282.79. And so that will be a strong support. And God help us all if we close below that support before the next earnings, if you're a shareholder of Tesla, because it will go lower. This is a double top on the monthly chart on Tesla. This is a monthly candle close. And the last monthly double top we had was over here in 2002. Again, you all kind of know I am a Tesla fanboy. I like Tesla. It's one of my long-term holdings. It's one of my swing trade holdings. It's all the things. I do it, trade it very often, but it does have evidence that there is some weakness out there. So you can assure yourself that I'll be protecting myself with options. In fact, there were countless people in a good way who were able to protect themselves from this gap with put options. And they did extremely well with those put options because Tesla stock did go lower, and they were able to use that cash flow from the put options to buy some more shares lower. So that's my general take on Tesla. A few more to go down this list. Alibaba did actually bounce off of a really good support. That support being the 100 simple moving average. Sorry, not the 100 simple moving average, the $100 price point. Again, that big grandma number, and the 200 on the weekly after having 1, 2, 3, 4, 5, 6, 7 selling weeks in a row. It got just a little too toasty. And then you had a really, really interesting gap come in. On this day, in July 8th, I told a lot of people that this is institutional buying coming in on Alibaba, and watch for it to go higher. And we have done so. Really good gap today. Really good gap on Alibaba, getting back above the 100. So I would expect it to sell off a little bit, trade back down to 120, and then slowly start kind of accumulating, because there are some sectors that have the opportunity to go higher right now. There's some sectors that have the opportunity to go lower. And this is a stock picker's dream out there. Meaning, if you have the ability to be fast, be quick, scan the markets, find your favorite trade, find your favorite setup, find your favorite industry sector, they're all going to move differently right now. And I really, really like that. So opportunities are abundant everywhere. Gold and silver, got very, very lucky on gold and silver back in June, because gold did break the 200 simple moving average. And I did have some bear positions on gold after it broke the 200 simple moving average. I don't know why my eye is so itchy. I think I'm dehydrated. Really, really cool pennant pattern, kind of consolidation pattern here, which generally to me does show a little bit of weakness. And there is the opportunity for gold and silver to continue lower. There were just too many people that bought into the hype, and they bought way, 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 way too high. And all you have to do is just go back to 2011 on silver and just kind of look at what happened. And I think that we're probably here-ish, right, on the silver pattern, where we have a little bit of a push higher. We retest this neckline one more time, and we will make it to the 100 weekly moving average on silver. So I'm letting you know now that will happen. And there will be a really good bounce, most likely, from that price point, which I will look to play on the 100 weekly on silver. And that'll be a really cool move. I mean, if you catch that, that was a 30% move in 2012. But this is probably exactly what we're going to do on silver. So practice this, back trade this, review it, study it, because going forward to where we are now, the similarities are almost so ideal, it's insane. So can we make it back up to 61? Yes. If we do, I'll put on one of the bigger shorts I've put on in a while on silver, and we'll see if that actually happens. But if it does start breaking down this support level before we get back up to 61, then I will just have some bear positions, smaller, looking to play it into the 100 weekly. Webull. So Webull is trying. It is trying. I think you all know how my general thesis on Webull is. Both Webull and Robinhood are very, very tied to Bitcoin, which I'm going to look at this review in just a few moments. And since Webull and Robinhood both have tons of assets that own Bitcoin, Bitcoin looks very, very weak, and Bitcoin does, I can expect it to go a little bit lower, truthfully. And if it does go lower, you're going to have to continue to sit in through some pain on Webull. We never got a weekly close above this neckline, or at least a strong one. So I was hoping that we would. We got a couple daily closes up there, but not a weekly close. Since this is a weekly chart, we need a weekly close above $7.44 for it to be a very, very strong neckline double bottom. We do not have that yet. So what I am still personally doing is I still am accumulating shares of Webull, literally 10 or so a week, nothing crazy. But I have got my cost basis down on some of my accounts below $10, using profits from covered calls, from a day trade, from another trade, taking some of that capital, throwing it towards my shares. This covered call is going to expire worthless. Was able to get like 12 cents for this puppy right here, which is really nice. So when this covered call expires worthless in August, or I buy it back for like 1 or 2 pennies, my expectation is to sell another one of 10 or 10.50 or 11 for September, which will be over earnings. I don't expect them to have an incredible earnings. They'll probably do almost exactly what Robinhood did, and I'll use the covered call premium to just kind of buy some more shares. Right now, we're going to get a pinch in between the 100 and 200, and Webull will be perfectly flat, most likely, and just kind of chop around, trade sideways into earnings. And if it doesn't trade perfectly flat or sideways, this is a very interesting candle that we have today. My support level would be right there. And if we break that support level, we'll just make our way back to the 100 and then kind of bounce. And again, get squeezed in between the 100 and 200. Is Webull a buyout candidate? The answer is yes. Will they actually get bought out? I don't know. Here's Robinhood. I did pick up some shares on Robinhood on Friday. And that's because we are down again. We are pulled back to the 100 daily. I and a lot of other people got really lucky on Robinhood and were able to take a bunch of profits either up here or right here. So if you're buying this dip on Robinhood, I am as well. So I'm in it with you. I love this high wave candle. This will be a very, very, very interesting high wave candle to see if and how we hold. So this high wave indecision candle at the 100 is literally telling us, I don't know what way we're going to go, but we will go one of the ways, and it will happen relatively quickly. Here's your weekly chart. The 100 simple moving average on the weekly chart on Robinhood is 77.46. We must hold that level. I think we will. But if we start closing below there and closing below these two candles, I can say very, very good chance Robinhood will go lower. This is just me planning on what could happen. I do still think Robinhood's a great long-term stock. And again, I am now back to purchasing it. I will buy some at the 100 weekly, but if we close below these two candles at any point in time, this will be a very, very strong little move. And overall, I think Robinhood goes back up. They had great earnings. They crushed it. It's a good pullback. It's a really good dip from 120 all the way back to 88. That's a 30% pullback. Phenomenal. Incredible opportunities overall on Robinhood. Okay. Bitcoin and Ethereum and all the other cryptos are like on a lifeline right now. They are on a coma and they're at a spot where it does seem to me that they are going to go lower. Now, are there ways to make money if Bitcoin goes down? Yes. Again, just Google it. But SBIT, SBIT, you can buy this or own some shares of this. If Bitcoin goes down, this will go up. And you'll notice how well we trade down to the 100 on the daily and then started kind of consolidating a little bit. But, buy low, sell high on SBIT. Bitcoin does not look strong. That's the reality. Here's the weekly chart. We are below the 200 on the weekly. This is a massive, massive warning sign. Ethereum actually has one of the better looking shorts out there right now. Look how perfectly we are failing the 100 on the daily chart. This is actually pretty much a 10 EMA trade right here. So again, just having some type of bear position, doesn't have to be a huge one, but having some type of bear position on an Ethereum trade, which could be shorting ETHE, buying puts on ETHE, having some type of bear perspective, shorting it on Coinbase if you have the margin capacities or Kraken. Those are all possibilities, but just know that if that does go down, there will be some general crypto related quote unquote meme stocks like Robinhood or Webull that probably will be most likely negative affected. All right. Apple gave everyone a gift on earnings. It was a gap down. It was a gap and go. Yes, but Apple was already down 9 to 10% on earnings. That's too big for the type of earnings that Apple had. They had great earnings. Apple is a wildly popular stock to gap down on great earnings, especially when it occurs at an all-time high. This was my analysis on the gap down, as I let everyone know and that we are going to likely gap down, trade back up, have a little bit of a consolidation. I mean, you can see the blue line. Here's a 5-minute chart on Apple, and here's how some people trade Apple on Friday. Is yes, there was some general weakness that you maybe could have made some bear money on, but probably not. If anything, if you bought there at that support, at that giant bull candle on a 5-minute chart, you actually got rewarded pretty well late in the day. But my overall take on Apple, great stock to buy the pullback on, great earnings, and generally will consolidate, chop around, and go a little bit higher. Google was probably one of the easier trades, in my opinion, of this earnings season after the gap, of course. So you had 3 bear candles in a row. Bear candle gapped down on Google. That's a bear retest gap. Google's earnings were serendipitously splendid. Then you had an inside candle both with upper shadows that said, hey, I don't know. On that day right there, I prepared myself for the, I don't know what direction we're going to go. I'm game for either one. The next day, we opened above the high of both those candles, opening above the 200 simple moving average, giving you a very, very easy spot to either A, buy some shares, or B, pick up some GGLL. It's another just 2x ETF of Google, which a bunch of people did. Most of you probably all know that I just got back from a trip in Croatia called Money Grows on Trees. Money Grows on Trees is the name of my book. If you haven't bought it yet, check it out. It's a great mindset book for your vibration and your frequency around money and wealth and investing and trading, because what you do frequently becomes your frequency. In fact, your boy did just get this book translated in Spanish. If you have a friend, family member, or someone in your life that prefers to read or speak or learn in Spanish, get that book for them on Amazon and send it their way. I will have another Money Grows on Trees experiential cruise in August of next year. I would love for you to come and visit me on this experience. I can assure you it will be the greatest thing that you've ever done in your life. I put on really, really great events. They're extremely high frequency. They're extremely high vibrational. treesormoney.com, August 8th through the 15th. We're going to start in Budapest. We're going to end in Germany. We're doing a riverboat cruise. I bought the entire cruise ship, and I'm going to put 150 of the greatest people on earth on that ship, and I want you to be one of them. I can assure you what the goal of this trip is to do is to break your mind and show you what's actually tangibly possible for your life. So I would love it if you can sign up for that and be a part of it. It will sell out, I promise, and it will be the coolest thing you've ever done. All right. The reason I say that is because a lot of us did really well on Google on the boat. We bought some shares, we bought call options, we played it long. And there was a couple traders that made tens of thousands of dollars while we were cruising around Croatia on a 155-foot mega yacht with some of the best people on planet Earth. Anyway, what I'm trying to say is trading is easy, and it's as easy as you want it to be. I did not participate in the Amazon gap specifically, meaning I didn't play any earning options or anything like that, but I did get filled with two of my pyramids off of the 100 and 200 moving average. Amazon was a great gap on great earnings. Shout out to Chris Camillo. I'm glad that you nailed the timing on that one, brother, and the luck paid off for you. Phenomenal gap. Really, 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 really great move. And this is a spot where if you are going to play some hedges on Amazon, if you have shares, this is where I would, right? At open, you can sell some calls, you can buy some puts. Really, really good chance that this gap right here will eventually fill on Amazon, or at least a portion of it. Buy the dip when that happens and make some money on the upside. But I would not be buying Amazon at 275. I wouldn't be buying shares, at least. If you're buying puts or selling calls or getting into a collar, I think that's the wisest thing to do. NVIDIA, I'm in bullish on NVIDIA, and I have a trigger to buy some protection below 190. We'll see if we get down there. NVIDIA it's trying. We're going to see. It's doing all the things that it needs to do to be bullish, but this is a double top. Boom, 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 boom. We did close below the neckline. We are retesting that neckline right now. I'm going to give it a couple more days, but if it breaks lower, I'm going to have to buy some protection for my positions on NVIDIA. Although I don't want to, it's just something that I will need to do because it's at a very, very pivotal spot. Weekly chart, you have a overall good little trend, and the monthly chart, we bounce right off the 10 EMA on the monthly. But this is an inside month candle on NVIDIA. So it's indecision. We're going to have a big move coming in the near future this month. I don't know what move it's going to be, but I'm prepared for either one. All right. I know we have a lot of things to look for. Iran was another trading opportunity. If you use any of my candlesticks or gaps or, volume or the 10 EMA or whatever you're using, this was a trade that we played on the downside. That's a perfect shooting star candle. It was a 10 EMA trade setup. We were above the 100 and 200. And then once we closed below the 200 and 100 there, we had another bull candle retesting it from the bottom there, giving you an opportunity to short on the downside there or there or there or there or there, allowing you to have some protection or, again, having some puts. We also were able to notice this pattern right here, where you had three perfect shooting star candles in a row with the exact same low below all of the major moving averages, right? I mean, it was just a really, really, really clean, classic trade setup. And again, just, I mean, entry there, stop there, and that played out swimmingly. That was a great cash flow trade on IREN. So as of this stage, what's it going to do? Probably chop around for a bit. I love the 100 weekly. It's a great little spot for it to bounce off of. We are bouncing off of it. If we break below that, IREN will go lower. I'm letting you all know that now. You can be like, Newsome, how do you know? I've done this longer than you. That's how I know. Really good support, really good location, great looking candle. It all looks pretty, but that's a double top on the monthly chart. And if we close below the 100 weekly, we are going to go lower. Will that happen? I don't know. I'm not sure. We're going to wait and see. I hope it doesn't. I hope it doesn't. But if it does, it's going to continue to get gnarly. So that's my thoughts on IREN. Trade desk, still doing absolutely nothing. It's consolidating down here. I'm really, really, really interested to see how they do on earnings. This still is the stock that's the worst, one of the worst performing stocks on the S&P 500. I'm fascinated to see what it actually does do on earnings. So we shall see. But, you know, in general, earnings, I mean, they look okay. 2025, which was last year, right? They had a little bit of a decline, as you can see, but the forecast still looks strong and the overall revenue is still increasing. So it's definitely not a position that I would be extremely excited about at all. So we'll see how it gaps on earnings. But if you're picking up one or two shares ever so often, I think it's an okay stock to slowly accumulate on. But we'll just kind of see how it does on earnings. Duolingo, same thing. This one's going to be one that's going to be a pretty good opportunity to have a strangle on over earnings because I do expect it to have some type of good gap this week. I've been picking up a few more shares of this again, very, very slowly, like literally 5 or 10 shares on big down moves like this one and this one and this one and this one, a couple over here. So just slowly picking some up because we did have an institutional volume candle come in. We had a trap right there for that candle. We ended up going higher. We closed above the 100. And again, their revenue is still going up. The product itself, I actually think, is total garbage. Truthfully, I think the product is super lame. But it's kind of like Planet Fitness, right? They have a lot of people on reoccurring revenue models. And I don't think people are canceling those reoccurring revenue models. And so therefore, they just kind of have some capital baked in. But it's not a stock I'm very, very excited about at all down here personally. We'll have to see how it does on earnings. But again, a straddle or strangle over earnings, if it has a 10 or 15% gap, could pay you pretty okay, especially if it gaps down and opens below 112, which is very, very possible. But if it can get above 200, then there's a chance for it. Dutch Bros did finally break out back in May. I talked about having a possible gamble on it to see if it would gap above the long-term averages. It did not, but it did eventually get above the long-term averages over here, giving you an opportunity to catch some good little push right there. Shout out to my buddy Chris Resner, who loves Dutch Bros. And this one's going to have earnings right around the corner. If earnings gaps down into 57 right here, this will be very buyable on a longer term scale. The weekly chart still looks pretty good. We're above the 100 on the weekly. We have broken out that downward trend line. $80 is actually a possibility. Dutch Bros, kind of like Starbucks. People still use them. People are still shopping there. People are still buying there. And the chart looks good. So, you know, for the most part, interesting to see what it does on earnings, but it looks okay. Iconic, IONQ, same thing again with breaking down below the averages. I mean, you had an impeccable, like just study this trade right here. Just print this chart out and study it. Super nice trade right down to the 100, got the compression, had a bunch of bear candles in a row. And this right here was your entering signal to short or to buy puts or to go bearish, expecting this gap to fill, which it did. Even if you caught just that move with some puts or with some shares that were short, you were able to increase your cash flow. We are below the 100 on the weekly, which is a very, very large warning sign. And I, fundamentally don't know a whole bunch about this company. It's just a fun stock to trade. but I don't see how this one has a good earnings report and probably gaps down. If it does gap up on earnings, faded off the 100, 200. But yeah, overall, it does seem to have a smidge bit of weakness on Iconic. So just make sure you have some protection over earnings. Wolf was crazy. Wolf was crazy. We still got an earnings report coming up on Wolf. I'm interested to see what this one does. This thing has been so volatile. And I did pyramid into this one on the pullback and had a couple of exits because the moves were just too big on these days up here to trim off some profit. And when I got my full pyramid fill down there, I was able to, after 5 up days in a row, get into a collar over earnings, which I'm in. So we'll see how that plays out. But as of right now, I have a protection on Wolf. Things look fine on it for the most part. I'm interested to see how it gaps up. I love this pullback. I love this weekly hammer. And, I like the monthly chart. So we'll see. It definitely does look like it can go lower, like a lot of other things, but the stock's been around for quite a long time. And if the whole data center thing keeps playing out, this is going to be a really fun one to keep your eyes on. This has been a great stock to actively trade. Oscar stock, I'm one of the stocks I'm most bullish on. I think it's a matter of time before this thing gets up to 37. So this is in the health space. Again, totally different space than a lot of people are watching. A lot of people are playing the data center play, while Oscar has just been breaking out of this long-term trend line and has just been slowly being bought up and has held up very, very well. So whatever gap it does have on earnings, I think will get bought up. But this chart looks amazing. I mean, really good flag, really good buying candle. When the whole market was weak, this thing was strong. So to me, that says the Oscar is going to go higher. Intel, you have a head and shoulders pattern on Intel. You have a very, very large gap that has not filled, which I think probably does end up filling this guy right here. I don't have any position on Intel presently. It is gapping down today, and this has been a very, very fun stock to day trade. So if it gaps down, I think it probably rotates up a little bit and then probably trades down again, truthfully. Intel was just too hot. It was too flipping hot. What is causing Intel to go up to 140? Right? Like, come on. Obviously, this looks something like 2000. I mean, obviously, it has some similar characteristics to 2000. There's no way you can't see that. Therefore, there's some chances that Intel goes lower. I'm not extremely bullish on Intel at this level personally at all. IBM, have no position in it, but there's a bunch of people that love IBM at this price point. I went to the Money Show in Vegas and just talked with a bunch of people way smarter and way richer than I am. I love being the dumbest, poorest person in some of the rooms that I go into, and was at the speaker event where, hedge fund managers and portfolio managers and people who are saying words that I haven't heard in a long time. They're pretty excited about IBM down here at the 200 on the weekly. So take that for what it's worth. Buy low, sell high. Dividends are around the corner. Again, I don't have a position in it personally, but I do think that a lot of this gap is going to fill. They had the largest drop in history on July 14th, the biggest single drop ever in the history of the company. And we've actually held pretty strongly on IBM. So that looks good. 2 other companies that we started talking about and we've been discussing and looking at really since May, and there have been a few people that did really well on Lockheed and Raytheon. I'm not one of those people. I'm not a big war stock guy, but if you were slowly accumulating this name on this pullback, you got rewarded very, very nicely on this earnings gap. Remarkable bullish gap and go, opened above the 200, ran to the 100, had this phenomenal S curve back down. It looks to me like this is going to go higher, and this is another stock that are both Lockheed and Raytheon. They are on the S&P 500, obviously, and they look strong. So these are some of the companies and the sectors that are actually holding up the S&P 500 without it necessarily being, some of the mag companies like Tesla, which is down a bunch, Netflix, which is down a whole crap ton. Amazon looks fine. Google looks fine. Apple looks fine. But there are some of the other names that are definitely struggling. Meta is another one, obviously, but Raytheon, yeah, I mean, it looks good to slowly go up. Reddit, I actually think Reddit's a buy down here. They got smoked on earnings, and I got very, very lucky. And I will always tell people when I get lucky, I got very lucky on Reddit, that it did go higher and bounce off the 100 daily and the 100 weekly here. And I was able to sell my shares at the big grandma number of 200. And I think I'm gonna start accumulating some Reddit again. 5, 10, 15 shares a day on down days, maybe selling a put at 110 or 100 or 120. See if I can get some shares lower. Earnings look good and people are still using them. People still use Reddit. It's a social media that, has its own little tribe and its own little flavor. It's at a trend line. It's, they had good earnings. And I don't think this is a stock that's getting really beat up by the macroeconomic stuff with the whole war in Iran and oil and whatnot. This was a double top neckline, which is why I exited my shares at 200. And I was profitable on them. So that's kind of why I did it. I think if I can start doing that again, I will. Zoom, double bottom on Zoom off the daily 100 and 200 weekly chart, still above the 100 weekly. Monthly chart still looks okay. A product that I use, that I understand, I spend money with it. Kind of like GoDaddy. It's one I'm just accumulating some shares of from time to time. Like, hey, it's down. Let me buy 10 or 15 shares. But that is a very nice double bottom. And I do think that this gap up probably will fade today and will give you an okay buying opportunity, just something to watch. Again, if you use Zoom, if you're a business owner, if you do webinars, if you do sales, any of that type of stuff, you probably most likely use Zoom, and they're picking up, some share space in other markets, buying some other webinar products and things of that nature. But again, their revenue is holding strong. It is, so I don't know. It doesn't look that bad. TE, T1 Energy. Again, just another stock that had really, really, really obvious sell signals right here. You have to be able to see that. You have to be. If you know anything about candles, if you've watched any of my videos ever, you have to know that you can play that position bearish here with puts or something, sold calls, short shares, something to just create a cash flow event. I think this is, again, a very volatile stock. It's extremely cheap. If you're buying it low enough and holding on to it long enough, you might end up winning on it. Just do a little bit of fundamental research on it, because I think that's going to be what's required to win on this one. A stock that I have not been bullish on ever, and I've been very publicly bearish on, is Oklo. And it's because they have no earnings. They have none. So here's the thing you got to ask yourself. They have $0 of revenue. If companies like Meta and Reddit are going to go down on good earnings, and like Apple, right? Apple's going to gap down on amazing earnings. What the heck is this company going to do? They broke the 100 weekly, where I shorted the absolute bricks off of Oklo. I mean, I shorted the pants off of this thing by buying puts. I bought a bunch of $50 puts and $55 puts, which I sold for a profit. And again, that really, really helped out my portfolio. It was a very obvious setup to me, in my opinion. I mean, go and practice it. Back trade this level. Back trade what was right in front of you. They make no money. So why in the heck would they go higher if other companies aren't? KEEL, Infrastructure Corporation. I love the pullback to the 100, 200. This is worth pyramiding in, but you're going to want to protect yourself over earnings. So again, another data processing type of play. Very volatile stock, very cheap stock. Love the hammer on the weekly chart, monthly chart, just kind of slowly doing its thing. But if you're buying it, this is where you're buying it, and you're probably going to have some type of pyramid on it. Another rando, LAES, failed the 100, had an opportunity to make some money on the downside here. I don't have any position on this one. Can't really see a whole bunch of reasons to do so. I think it's just one to avoid. I'm just going to take it off the watch list. Don't even touch it. EOSE, probably the same. I mean, I know there's a bunch of people that like it a lot, but I don't know, man. I don't see it. I don't see what they're seeing. If you have some shares, great. Just do a lot of fundamental research on this one to make sure you still like it. That's what's going to require you to hold this thing, is do some fundamental research, do some deep dives, make sure you like the revenue, make sure you like the model, make sure they're actually doing things that you understand. I don't have any position in this one, but I did get a request on it a bunch, and probably one to avoid. CleanSpark, I like this one. I do. I do like CleanSpark, and it's really because it's just been so disciplined at the long-term averages. The 100, 200 on the daily, the 100, 200 on the weekly, and the 100 on the monthly. It's been very, very disciplined here. And this is your high wave candle on a monthly chart. So here on CleanSpark, a break below the monthly 100, which is essentially 1183, and we're going to go back to 8, and it's going to be kind of, shitty again for a while. But if it can start breaking above this high wave candle, which the high of that is 1610, I actually think CleanSpark can pump. Again, just my opinion, but overall looks okay. Earnings is coming up this week. GoDaddy. I did pick up some more shares of GoDaddy down here on earnings. I unfortunately did not sell my shares there, really because I don't have too big of a position on it. And I was like, maybe they actually have good earnings and gap up. They had great earnings and gap down. There you go. So I'm going to buy a couple more shares. This is just a company that I understand. I know how they make money. I use them. You use them. I'm sure you have a bunch of domains. They're in a downtrend, and you're battling the 100 on a monthly chart. So it's a buy low, sell high, accumulate, be slow, be methodical. You probably own the company, you probably use the product, and their earnings were fine. So yeah, buy low, sell high, accumulate, be slow. Pinterest, this is gonna be an interesting one. Pinterest is really, really trying. Another great stock to get a strangle on over earnings. It's going to have a big gap down or a big gap up. And if it opens above 25, she's going to run. No one's talking about Pinterest. No one. But if it gaps up into 28 or 29, very fadeable. So sell your shares or sell your calls up there. But it's still hanging out strong. I know it's kind of crazy. Not a lot of people talk about Pinterest, but they still are being used, and they still have some support down here, and they still have revenue, and they still have users and all the things. Like, again, revenues do not look that awful. It's good to study them. Revenues are increasing. That's what you want. So it's not a sexy stock, but it's a very, very fun stock to actively trade. Shout outs to Sean Kelly and a few other traders who pretty nicely played Pinterest in and around here for some wins, right? Buying and selling. It's just an active, very liquid stock that moves like 20% every other 2-3 weeks. So, that's what it is. Boobies, who doesn't like those? Victoria's Secret, great gap on earnings, retest gap, retested into here and into here. Trend actually looks strong. It's a retail name. Retail, again, has actually been hot. Talked about that this morning, 45 minutes ago at the beginning of this video. Different sectors, different spaces. Yeah, retail is a strong space right now. Retail is good. Here's a retail ETF, XRT. So, Burlington, TJ Maxx, Ross, they look strong. Some of the discount names look pretty okay. Walmart, kind of, sort of. Again, Walmart, obviously not going anywhere. It's at a very, very good discount. You're buying it at 17% off. So again, just think about like you have a coupon to buy something at Walmart for an 18% discount. Are you going to go to Walmart and buy that grill or whatever you want to buy for an $18 discount? Probably. Not going to be a sexy stock, not a sexy name, but it is low. It's one to buy low, buy slow, and accumulate on over time. And team, the truth is there's always so many stocks I can look at. There's so many opportunities out there that exist. Opportunity never goes away. It only switches places. And my absolute goal for this video is just to give you guys their awareness, the situational awareness that yes, you can make money in down markets, you can make money in up markets. If you spend an absorbent amount of time learning and studying this craft and really doing deep dives and just actually doing the work, actually following your rules, becoming extremely consistent, being boring, and doing the same thing for the next 3 years, you can win in the markets. You can. If you can, and when I say an absorbent amount of time, an hour a day, 2 hours a day, it doesn't need to be a whole lot more than that. But an hour to 2 hours a day, there are always opportunities to create remarkable, incredible cash flow for your family. Lock in. This is the time for it. This is the time. We are at such an awesome, awesome location in the markets where we can make a whole bunch of money as it goes up. Some money if it goes down. There's my alarm. I've talked too much. Thanks so much for watching this video. You are incredible. Make sure you subscribe to my channel. I'll put out a video like this once a month. Get a copy of my book. Be at the event in August of next year. Reach out to me if you have any questions. Let me know how I can pour into you. And my goal is to not only enrich lives, but to change the educational system of this country. My podcast, Solving America's Problems, is still going strong. We are now talking about housing, and I would love for you to download, listen, pop in there ever so often to see what I'm thinking about from the political realm. And you're an amazing person. Thanks for watching. You rock.